Hello, friends. Welcome back, all you diamond streamers that are willing to stick through all the technical difficulties. Thank you so much for tuning back in. And as far as I'm aware, I'm back live again. Let me know in the chat if it actually is live. Great, excellent. And we're just in time to see the markets close. Let's bring up a couple of charts here and see what the markets are saying to us. I've lost the one with the caterpillar drawing on it just now. So we hope to get that back. I'll have my technical team work on it. That's me. And it'll be in about 5 minutes after the charts are closed. Let's see if we can bring up AMC as well. Right, so we have these two guys. Let's hide all these drawings. Get off there. Right, and down to the last minute here. Have we got time for this? Yes, great. Wow, just in time for market close. Whoo, wouldn't want to clickbait anybody, so I put market close. Did I put market close in the title? Actually, maybe I didn't. GME prices, right, we did, just before the stream died last time, I think I got around to saying that the GME apes are happy above 218, etc. You know, 221, that's fine, big enough pullback, going right down to where that gap was. Hopefully, if the prices choose to fill it, that's a bounce from there. That's what you'd want to see. AMC has pulled back today. You know, it was super high in terms of the percentage coming back down the way, and we're really asking, can we finish above $25 here for the day? That'd be super lovely, and we'll go into finding out all sorts of reasons for why those things are the case here as things get going. Right, great. Looks like everything's working. Thank the gods, says Robert Zip. Good to see you, Kim Robbins. Nice to see you, Dead Money All Stars. Jeff Smith, David P, Nated Flight, Theo, Graham, Jeff, Ralpho, Goblin, Andrew, Karen, Mika, and 88 Dedem, Stronkel, David, and Alcy, and of course everybody else. Honorary Zoomer, Backyard Music, all you. If I miss your name, then I'm sorry. I apologize. Let me just bring up live chat as well, so I can definitely see all of your chat there.
Thanks,
Excellent.
man. Panic sold everything when you left.
Wow, great. This was David. David is bringing us in here for the market close down here. Pardon? Daniel. You see, I'm not even high like that caterpillar was. It's just the technical difficulties have thrown me. Not enough tea, I think, is the thing. Right, great. Pow, boom, yeah. Thanks so much, Daniel, for that tip. Why did it not come up? Did I say that? Let me just double check here. Yes, Daniel, but it doesn't have your picture up like it usually does. Maybe it's just my internet's being a weirdo again. I don't know. It's like it should be loading up people's icons, but it ain't for me. Whatevs. Anyway, lovely cup of tea. So what have we got then for the closes? That's going to be the close now, right? It is good. Good. Jobs are good, and we're above 218. That's nice. We're above 225. Let's see then how the day is ended. Oh, look at that indicator down below. Let's remove this one and replace it with my one that's a bit cleaner, and we'll kind of just try and make an assessment about how things have gone. We know that there was going to be potential for pullbacks, and we've seen that happen in both. The thing about it is that these, of course, have pulled back again down to the areas that we spoke about yesterday as being where we needed to see them hold. So in a funny sense, we know you'll remember, well, actually with the AMC anyway. Remember, we were talking about this sort of region yesterday and saying, well, how we want to see how the prices respond, having come down here a couple of times with that potential Adam and Eve. And of course, as well as sort of the more likely kind of scenario played out in the end with the big jump up. And ultimately then, of course, we're right back kind of where we started at again. So a lot of moving and shaking in the markets there without us actually having broken back down below that key level that was formerly our key level, and kind of bearing that in mind as we look at like where our latest sort of key levels are will be useful, I believe. With regards to GME, we were really hoping that things would stay above the 255 area, and then they dropped on down the way here. I've actually come in for a sort of partial gap fill as it stands on this 3 minute time frame. Wait a minute, 3 minute. So we haven't actually what's the deal? Have we filled this on a decent enough time frame? Move. No, doesn't look like it. So well, great. I mean, if we go down towards 215 then after all and get that entry, then super duper, but who knows how this will actually play out tomorrow at the minute. all we could really say is that we're happy are happy enough that the things have come back down where they are now. Obviously, providing things then continue to go towards the top side in the long run, but like in terms of the medium term, we're even happy enough with like or hoping to see prices lower down here just so that we can sort of stack up again. But at the minute, you know, looking all right in terms of the pullback. So let's measure this out a little bit, and we'll kind of follow along. What's that? Is that English, Rocky? I'm not so sure. With yesterday's chat where we were using Fibonacci's a whole bunch to kind of point out a couple of things then. Yeah, let me just roll this chat down at the bottom as well. I want that to be updating. It has updated with the avatar. I can see your avatar now, Daniel. Don't know what that's all about. It's the logo of my business. Oh, sweet. Awesome. It's a good one. And I missed it. So that's effective. Yeah, what is your business? Totally. I have a work Gmail and personal work has a Spartan. That's the Spartan. That's right. Cool. I'm not a cat says, why does it hurt so bad to see it fade like that? It just does, and that's it does. Right, okay, let's all get round together, apes, and console each other. We spoke about this the last couple of days. We said, you know, prices looking lovely jubbly. There could be pullbacks. We know the feeling. Let's remember the feeling. Like I said to remember, I said it. I hope that some of you have kind of put it in your memory banks there. Remember the feeling of it being like super awesome, and that because of course there's going to be times when it feels less super awesome, and that's what happens when you see these things. What we want is to find that the prices can turn around in at around about this 382 here, 217, 218 on GME. If they push down to 214, etc., or even $200, or you know, and blah 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 blah. We've already spoke about. We're comfortable enough. You know, we're comfortable enough. I don't want to see them in the near term future. I don't want to see them going down past 186. When we spoke about what I kind of wanted to see happen there recently, it was with regards to GME. It was going to be one of two things. You know, either just cracking on up the way and like there we go, party started, everybody's happy anyhow. Or we have a pullback down to like an ultra value area for people to be able to get in with an edge in the markets, as it were, so that we can like join in with any sort of whale cohorts that happen to be in it around about that area. So we're hoping that there's going to be some whales in here. We're hoping that there's some whales in here. To kind of like shore up the sort of plunge protection team, and that's and if it goes down as far as that. But of course, you know what we want to see then as well is like various sort of cohorts out there, kind of either kind of coming in here at the 218 area or coming in at the and you know with these other ones like the 200 area there where the 50% retraced line happens to be. Okay, with regards to AMC, what we were looking at was kind of from that low down there over here and up to this area previously, and talking about where the 236 is coming in at. Was it that one actually? Let me just this is the 1 minute time frame, so no, it wasn't that one. It was a slightly different one. Wasn't that different though? It's like a 5 minute time frame I was using. Down here, was it? Yes, I think it was. Right, so kind of like catching up then with what we spoke about yesterday, how we rose up towards the top side here, and we were looking to see if we could sustain prices or perhaps push on past the 236, right? And we came right up towards the edge of it for close, and then with the positivity then that just kind of ran us up the way. I suppose pre-market or post-market trading on this one kind of carried us on through. You know, if it was the crypto markets, etc., we'd have just seen it all happen on the one chart. I've not got it displayed on this one. I could if I wanted to show post-market and pre-market, etc., but we're all good with just having the gap there. And seeing then that as that gap was filled, it came back down and was, as the gap was made, then later on that day, it came back down and was filled, and it was a big move as a result there. And dragging this on up, we can see then that actually, as a result of this sort of the way that this is working together, is yet again, like, you know, that we're seeing that the 618 is coming in at this area right here, having then gone up for the next high after the beforehand. So when people are thinking like, you know, in a sense, you know, why did this area happen to be the top, then we can kind of put it into the context of the recent price action. I think that maybe goes a degree towards explaining Therefore, why this 24, 25 area is kind of important as a pivot in the market, as you can tell. And then why I'd be looking down next towards the sort of the 20 area if the prices were to, of course, break below this here point. So I'm not so, essentially, you know, I'm happy buying it at 25. I'm not as happy buying it at 23, 22, 21, whatever, you know, that sort of thing. Generally speaking, because I'd rather get it at that stage, you know, down at $20. Okay, but just in what we talk about these things is like how the kind of the markets can move around, and just kind of wait for confirmation. It's okay to give up a few percent here and there to the market, you know, just to kind of stay that little bit safer if you are looking to kind of buy in again, etc., and that sort of thing. Not financial advice. I'm not a financial advisor. Right, so that's kind of where we stand with regards to how we did yesterday, and then what kind of what we're looking to kind of happen as well, hopefully then tomorrow, with regards to these two. Right, I've not done anything extra sort of especially fancy pants with regards to looking at oscillators, etc., but there's things that we could do, I suppose, if people would so desire. But we were coming up towards the end of the week, so I thought I'd well, technically that was the end of the week, right? So let's just call it what it is, I suppose. And let's look then at how things have been going. This is the linear chart, and I'm on the 4-hour time frame. So you can see this most recent rise up was, of course, huge. Popping onto the logarithmic chart so that it gets into a little bit of a better context. Let's move up with the various moves that we've had recently in the past. And it fits together as we look at the high that we've had just recently with regards to that story that we were talking about on the upside here, and kind of casting our eye over. Oh, thanks so much, Purple Haze. Welcome to Early Sporter. Thanks so much for being for joining the family here. So we can see that we had that sort of balloon area, right? And of course that got popped at one point, right? But there was that area just there. Thank you for joining the family. Thank you. Right, and we're just kind of looking past that in terms of this upwards line of resistance, and then kind of, you know, like that's great. So we've come in here and we've done things that are within the bounds of expectation, and just looking at the formation on the chart, we can acknowledge the sort of the bearish aspect of it if we wanted to, in terms of looking down towards where the prices could drop down to, then therefore to kind of scope out this a little bit. And I suppose as well we could talk about this and ask a question: is this a channel or a wedge? Indeed, you know, if I were to draw it in on the linear chart, then you'd be looking at lows like this and highs more like that, really. Okay, which is of course a massive broadening structure, and people don't like to talk about broadening structures because a lot of the people don't like to talk about them. It's not that something that you necessarily like seeing, because of course, you know, thinking about that area down the way as where support is fairly catastrophic, and the measured move off of these things is quite often just simply to go back to the initial starting point from it. So that would be somewhere down in that sub $10 category, sub $5 category, even with this one, if that were to kind of be a story, you know, without having to you know. So that's like the bearish case, which is good for us because, you know, people looking at it like that are of course seeing a different story to us when we kind of think about these rises up is going to be, and it's going to be part of the par for the course along the longer term aspect of things. Should we see a really outrageously bullish market, which is essentially what, you know, we're all hoping for. So you could of course as well kind of include that price action in there, and perhaps, you know, people would make the argument for saying that you should, and then making this even more of a wedge and looking for negativity in there. But that's all good, because we talked about how, you know, if you are talking about like having sort of macro sort of squeezes happen here with big stuff, then of course you're going to need to see negativity, and then having awareness of what that could look like. You know, what the monster that lives under your bed could look like. Is that the right actual analogy? Maybe it's more like kind of looking at the trees outside your window during the day, so that when you go to sleep that night, you don't get scared by them. That's the better analogy, right? So that's what we're doing here. We're just kind of scoping out those wintry branches and saying what would happen if their fingers came clawing for us, right? But if otherwise, jobs are good in, right? So that's why we're talking about 25 right now and saying we want to see that operator support, and then let's acknowledge the lower side of this is looking down towards 17 if they did drop down the way, or indeed 15 afterwards, right? In terms of AMC. Could the same thing perhaps be said about GME when looking at this price structure over here and acknowledging that this is indeed the linear chart, and it looks like, you know, those highs and those lows, etc. And if we pop it onto logarithmic, then what's it look like? Like kind of what are its characteristics? If you look at it, right, just get rid of this for now. If you look at it from the same sort of point of view, you could make the same sort of debate, okay? So a lot of people would be thinking about things like aiming down the way, trying to do it with a bit of momentum to crush people out. It'd be interesting to see if there's inflection in these points here. I would rather see it continue towards the top side, but just simply looking at that from the point of view in terms of, like, you know, GMEs and all-time highs, and without doing any sort of further analysis, it's hard to predict, you know, what could happen next. We could be looking at sort of the range of this thing being expressed towards the top side, which is another 30 odd bucks up the way. That would carry us up towards that 300 territory. And then of course we're asking different questions in terms of the bigger picture side of things, because we'd be up there at this region, that previous high that we had in March that we've been looking to, you know. So can we get up there? Yes, we can. Do we want to get up there? Yeah, we all do. Are we willing to have the prices drop back down a wee bit? Yes. In fact, we know that there's some people out there that are anxious to see that happen, because they're actually that bullish on this thing that they want to see it happen. So that's the full scope of the market right now, and trying to look at how the sort of look at those, if you like, those the bare branches of the short side of things, just to kind of get a handle on what could look like, so that we're of course better mentally prepared for any struggles that could happen. And why not talk about things like that? Because we're going into the weekend. We want to have a good weekend, right? We want to be able to, you know, celebrate the things that we're supposed to be celebrating, such as the fantastic price action that there has been. And there's no better way to do it, perhaps even, than to jump over towards the weekly chart and hide everything and say, you know, that we have seen good weeks in the past in GME. In fact, let's bring up AMC at the same time as well. And yeah, so like we've seen good weeks in the past on this price action on both of these stocks, and we've celebrated it at the time really full-heartedly and enjoyed the moment while it's happened. And then we've seen the pullbacks that have come since, but we've continued to see the prices pushing towards the top side. With just a little bit further and a little bit further, we know that the paradigm shift will happen for a lot of people, and that will create a lot more demand for this stock, which we like. In terms of looking at this one then and saying that there is still the kind of the nature of this area pushing past it into that 300 territory starts to change a lot of opinions. We already know, we did a lot of hard work coming up here and proved a lot of people wrong that said we would never even get this opportunity. Now we're going to take our time and be patient when we need to, but it could be the case that come Tuesday, we just see this thing flying towards the top side and taking out 300, and not only having proved people wrong, but got a lot of people then that were former opponents to this idea coming in and joining us as part of being the proponents and of course the protagonists of this greatest story ever told, right? So that's what we're hoping to see happen. and the paradigm shift that can happen here, and looking at it on the weekly time frame and just seeing how far up we've come, you know, and how much work it's taken all the time, and remembering then in terms of the logarithmic chart, just how, you know, that a candle over here and a candle here are represented similarly in size here because of the same percentage movement in price. So if an ape got in at this point and the prices went up, they made the same profit as an ape that got in that point, and as the prices moved up that amount on this logarithmic chart. And as I hide the drawings then and say that this week, while it's been, of course, fantastic here on GME, leaves so much headway up above that we can target up to, and you compare it to the fantastic weeks we've had in the past. Over here with GME, you can see that, or AMC on the right hand side here, you can see that this week has been really incredible, and there's no denying it. But look at the struggles that have come along as well afterwards, which we've overcome, putting in big consolidation triangle here over a number of weeks, going back a couple of months, just to push on up the way and prove everybody wrong yet again. There is always a value play to be had on this one, and to suggest that we've come up here and retest these highs is not in any way outlandish, having moved so far and put in so much good work with so many diamond hand apes out there in the world as well, contributing to this upswell that could have happened without the apes being involved, just purely looking at the market forces and dynamics that existed on trading this thing anyway. Thanks so much, by the way, Hank. So when we talk when we talk about this and see that the prices have been moving up so dramatically well, and remember, thank you so much, mate. And remember that, of course, this is really all down to you and I, us all together, as and the impact that we've been having. Then to think that if there's more struggles to come, that we couldn't survive them and go on to have many more weeks just like this is, of course, wrong. And we're going to undo some of the damage of some of the bad weeks that have happened in the past as prices have moved down and the shorters have tried to come in and push things back the way. So yes, it's been good. We have pulled back a chunk, but the amount that we pulled back already is while it's greater than what we pulled back in the entirety of last week, it isn't greater than some of the other positive weeks that we've had, of course, and that is it, and it is achievable to move up here, retest these highs, and of course do another paradigm shift. So I talked about this in terms of the value play and really waiting to see if we can come up towards this region, and we've done it so well and quicker, frankly, to be honest with you, than I expected it. But this game has to then continue. We need to see the prices, of course, going up past that zone again. Current price has been in around 26, and saying to ourselves that we could see the prices dropping down here before coming back up gives us another opportunity, another bite at the cherry. And if that happens, then wow, the momentum that could carry us on up the way afterwards. And I've still not checked any oscillators, etc. So that's where we are. That's the weekly time frame to kind of just put things into context. We've done so well so quickly to undo in terms of this thing, decades of downward price action, and of course dilution of shares, etc., and all the other stuff that goes along that people talk about. Done that. Markets have closed already. They closed half an hour ago. 20 minutes. And then sorry, excuse me. And then we've done undone that in the space of, you know, a very, very short period of time. Then of course we understand that pullbacks could feel like, I know, a nuclear winter setting in, but we know that of course summer could be just around the corner. The volatility is real. The price action is real. The shareholders are real. And you know, we have the power and we're in control on both of these markets, which is fantastic to see. When we get to this point where we're above this zone and we're moving past 300, 400, etc. on GME, then nobody's standing in the way of it. Nobody's denying it any longer, and that's great. The Dead Money All Stars, welcome to early supporter. Thanks so much for that. Okay, so that was kind of looking at it from a weekly perspective, just kind of reminding ourselves that indeed there is more work to be done, whether that's coming back up and retesting the highs that we set in today over the period of the next, you know, we could do it on Tuesday, but it could take a couple of weeks, etc., and then asking the world to allow us to change the paradigm shift. You know, it's not just like taking the hedges money from them. What we want to actually see is this thing to go on a lot more. You know, if we were going up to these bigger numbers, then let's do it But there's going to do it piecemeal, do it piece by piece, right? Thanks again, Dead Money All Stars. And likewise, over here in GME, we're already in an area where people have to acknowledge that there's a paradigm shift, but people keep telling us that it's gone down the way, and just continually putting in new highs is just so great. To say that we couldn't have another week that tears towards the top side and see prices because coming in at 578 in the in June is silly. And at this stage, of course, because people have been talking about all this sort of volume and this, and whether or not people have gone long or they've covered their shorts, etc., 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 we know that ultimately, of course, we were talking about this before, that we had your chap, and he had his fishing rod, right, and he was trying to catch all the fishies, and we know that the fishies are biting, they're biting because of this type of thing, and they're biting because of this type of thing. Without those, then of course it's hard to do any fishing. It's a type of bait in a sense. So let's then hope that the markets continue to be on our side, because the trend, as the old adage goes, is your friend until the end of the trend, and the trend is certainly not at the end as yet, even if there has been a little bit of a pullback today, which we had anticipated. Okay, overall. Joshua Smith says, it's not the hedgies' money, it's our money they stole, and we're getting it back with interest. Aye, good point, Joshua. Thanks very much for clearing that one up. It's good to have everything, I'm speaking off the top of my head here, so thanks very much for coming in there and helping with the wee edit. Needed that one. Cheers. Mon the Fish says, trade spawn. Absolutely, Mon the Fish. Mon the Fish. People might not know what that reference is. Yeah, totally. Let's just go at the old YouTube. I've got to show you this here. Some people will know, of course. Mon the Fish. Let's see if it's got it in it without having to put in the name of it. Yeah, there we have it. Right, okay, cool. Nice one. So, good stuff. Thanks for sticking the emojis in there. Nice series of emojis there, Tony. Good emoji skills. Mika Monty chipping in as well. And cheers to everybody that is putting in the sort of waving and dancing and beer emojis and all that good stuff. Chin chin. Cheers to everybody. There's little sort of hints being dropped there about like the sort of the drinking stream. Will we have a drinking stream this evening? Well, I tell you, my hopes for that took a bit of a nosedive whenever the technology problems kicked in there. But keck, yeah, well then we kicked them in their kecks. We've got the technology working for us now. We don't work for it. And we're back on board. So there's a good chance that we could get one. What is that thing up there? Why? What? Run away from. So we've got this over here in the old Bitcoin. We're still waiting for an expression of it, right? Okay, the prices have dropped back down towards 35k. The volatility on this thing is real, ladies and gentle children. If we can go up past the sort of this general region, then you could look at it whatever way you want. You could call that an Adam and Eve, which is like had a consolidation period thereafter with a sort of another blah blah blahs. Or you could call the whole thing together, combined, the head and shoulders with a sort of sloping neckline, etc. Can we then do that? Is that possible? Well, it is on the cards, but we have of course got this negative trend. Anyway, what's that ugly thing down there? Get rid of that. Get rid of that. Get rid of that. Remove. Thanks. And pop on this one instead. Yay! So Bitcoin has there's this negative strength of trend, right? 1 hour time frame, negative strength of trend. What you'd expect to see. 4 hour time frame. Had the negative cross a while ago, and it's of course building up the way what you'd expect to see. This is coming in for this right hand shoulder. So if you want to talk about pattern sort of ideas, it's just another, like I said yesterday as well, it's just another expression of what is market structure in terms of a Jeopardy answer. I don't actually know how Jeopardy works, but I'm sure somebody in the audience could kind of figure out the sentence that would go around with whatever point it is that I'm trying to make if you follow along. Mon the Fish, right? What I'm trying to say is that, of course, this is one way of describing market structure, right? So you could say, what would be like, I am a head and shoulders, and you could answer it, I am an expression of market structure, right? But of course, that's not the way that most people think about it. They're just thinking about it how it's a pattern, la-di-da-di-da. But we can see without the need for all these, damn it, can I redo? I don't know what the redo button is. I'll have to add my own thingy back again. Oh, anyway, whatever. We can see that there's that idea of the pattern there, and what it does is it enables us to talk about the price action in a way that everybody can kind of get on board with. What you're saying there is we've had a couple of lows followed by what could conceivably be a lower high at this point, and that's what we're waiting to see. And of course, it can extend on down the way. It doesn't look any good if it gets really, really deep. If it does go down the way and you kind of ignore the whole pattern aspect of it because you don't really need to really focus on it too much, then you're back just purely talking about things like market structure again and what we've got at this level versus this level in terms of divergence, etc. Anyway, let me just and then the subsequent one as well, if there is another one. So I want to add on the DMI here. Wait a minute, my one. It just makes what we're looking at there more visible. Essentially, really, is what the main difference is between this and t'other. I'll actually not even use the fib levels, use the 40 number. So we came up towards 30 there, had a bit of a bounce back away from it, at our high, at our low, sorry, here with the negative DM showing us that there was this increased amount of negativity whilst the prices didn't quite make it down as low as they would have wanted to. So if we do see things turn around here, then it adds weight to the sort of head and shoulders idea, or indeed the significance of making a higher high at this point. Because whenever you talk about like a breakout of a neckline, etc., what that really means is that you're saying that we've put in a higher high, and someone could say, yeah, so what? I mean, higher highs happen all the time, blah blah blah. But you're saying, but no, this was a higher high that was better than the other higher highs, and they say why, and you get another Jeopardy question like, what is the significance of this higher high? And you could answer, it was part of a head and shoulders, which then you could then say, what is a head and shoulders? And then you could say, then you could say, Jeopardy is a bit confusing after a while, right? But I've given you the puzzle pieces, and within there, right, there's a lesson, okay, of some sort of shape. Anyway, what's Helly Hansen doing? She doesn't sponsor this episode. Get rid of that off of there. Whoops, didn't mean to have a Helly Hansen up there. This episode is not sponsored by Helly Hansen there. If anybody was worried about that logo infringement, should search Trey Planets into Bing Bong. Tiny planets. Tell you what, I've been looking at too many YouTube videos about AMC and whatnot recently, haven't I? When I misread tiny for Trey, Freudian eyeballs. So that's what we're talking about over here, right? And I thought, well, hey, this is maybe perhaps one of those ideal times, or is it? Nah, it's not really ideal. Not in terms of this price action and the textbooks. Scrap the last 10 seconds of what I was just saying there in terms of your short-term memory, and let me crack on with this in good faith, right? Let's talk about the Keltner channels, the Bollinger Bands, and all that good shiznizzle, right, my friends? So we have a different calculation in terms of the thanks so much, Colin. Really appreciate that. We have a different calculation in terms of how this guy works, right? Wait, that's VWAP. Get rid of VWAP. Remove. We could put that on for comparisons as well, if you like. Right, but anyhow, let's bring up the Keltner channels. Keltner channels. Here they are. So when Keltner was all right, okay, wait. Let's just instead of doing it the way that I was going to do it on the fly lessons with Rocky Outcrop, let's just switch it up a wee bit instead, right? And I was kind of removing the VWAP and all that kind of made me think like, let's add on the VWAP. So did I hit it or remove it? Whatever. Add on the VWAP. We'll add on the Bollinger Bands, add on the Donchian channels, right? Donchian channels, there we go. And now maybe we can learn about, come at this from a different approach vector, right? Groovy. different. Okay, so we'll have to make it so each one's visible, right? Cool. This is the Donchian channels. We'll make it so the top line and bottom line and upper and lower line of this one are white, right? So we've got the Donchian channels in white at the top and lower end. Then we'll put on the Bollinger Band, the style of them, the upper and lower band, they can be that really kind of really full-on green color. So that's a bit, so that's visible. You can see the change there. We've got the Keltner channels here. If I could speak. We have the Keltner channels here, and we'll put the upper and lower line of them as being what, like a sort of this blue. Oh no, the blue's not different. It's already blue. So that yellow color, that kind of really pastel yellow color. Hoping that you can see these things changing as I'm doing them. Maybe it's not. Maybe I need to zoom on even more in actually, so you can see it a bit better even. Okay, so far at the outside end, you've got the Donchian channels in white, you've got the Bollinger Bands in green, then that kind of not quite yellow color, let's make it actually yellow so people can call it yellow. That yellow color there, that's of course the Keltner channel. And then this one that's green, which will make pink or red, like this red color, that's the VWAP. Now they're all different. Did I put any more of them on? No, that's going to be enough, right? They're all different. And what I'm trying to do at the minute here is make a point that, well, 2 points really. These things are very similar looking, right? Throughout all of them. Of course, there's different calculations that go into them, which are resulting in some of them looking more similar, perhaps, than they otherwise would. For instance, if I just pop this up to 2 on the Keltner channels, then it's right up here next to the Bollinger Bands and the Donchian channels as well. So, you know, you can see that, you know, they are very, very similar, right? Okay, now what's the core component behind a lot of these? And it's one expression or another, I suppose, of an average. An average which makes the baseline, and you could call it the median line or the middle line or the neutral line or whatever word that you want to have, right? You're coming up with some way of forming a sort of average base, and then what you're doing is you're adding to the average base line a couple of channels, right? Of channels. So we're gonna add to the baseline something that kind of looks something like this, so that we can say, oh, okay, so there's price action between these 2 points. Then, so before we get into any sort of the maths behind the technical aspect of what the actual average baseline is in all of these instances, you can see that the sort of, generally speaking, it seems to be more or less in a similar place, more or less. In fact, the Keltner channels, was the red one the Keltner channel, or is that the VWAP? The VWAP was the red one, yeah, sorry, yeah. So it's a lot tighter in there. Whatever. Okay, cool. So before we get around to talking about that, we can talk about how they've got sort of a generic sort of use case idea, right? So you've got the sort of the calculation. So that's the calcs, calculation, the calculation, calcs. Gosh. You can see that down here, right? But you've also got like the use case, the use of these things. And there's a couple of different use cases for it. You've got like use case A that people talk about, and that's when the price action itself has broken down past the baseline. That's kind of use case number 1 when it goes down past the baseline, you know. You've got like use case number 2. These are in no particular order. In fact, I deliberately chose there in my extensive planning for this section to put them in an unusual order so that people wouldn't go I know what he's talking about. Use case B is when we have seen price actually bounce off the top of one and go towards the lower end, etc. That sort of idea, right? Then you've got use case C, which is when you have price action. I don't know, is this worth going into so much detail? Well, somebody did ask about it, and I thought, well, how about we do this? And this is somebody asked, so let's deliver, right? Just help one person, and you help the world, right? It's one person at a time. So the use case sort of C is when you've got the prices breaking up above the channel. Like, this is kind of the sort of the three typical ways of using any of these things, right? But we can acknowledge that there's differences between them while they look the same. So just to kind of lump them all in together as being the same would be inaccurate, but you can see that there are essentially those three use cases. Let's then look at a couple of little distinctions between the average base then, because of course the upper and lower line is one half of it, if you like, and then you've got the base as being another half of that aspect of things. And you can see then, I suppose, like the Donchian channels is 50% between the high and the low. So you'd be looking between the high and the low over the period of a certain period of time. So you can see there's a low over there, and perhaps your Donchian channels look like as high as that, and then they go, right, okay, so 50% between these two zones, whatever, that's where our baseline will be on that one. Then you've got Bollinger bands, and that's a 20 period moving average. So you're going to have this looks back at sort of 20 periods of price action, and then takes the average price and pops that in there. Then you've got the Keltner channels that typically uses 10, although I think out of the box here it's using 20 as well as a simple moving average for the median point. And then you've got the VWAP, which has takes an average price for the day's trading, and that's where that will be at. And then the next day you'll have another average price, and then the next day you'll have another one and another one and another one. So you can think about it then and say, well, obviously there's a lot of different aspects to moving farther away from the baseline. Because if you're moving far away from a moving average, then that's moving far away from moving average. If you're moving far, like, you know, such as the Keltner channels and the Bollinger bands, if you're moving far away from a 50% region between prices, and you're moving far away, then that means, like, that's what that kind of means. That's what that has its own significance. If your price action is breaking above an area which is defined between two zones, you know, specifically, then that means something. So that would be like VWAP, right? And what's the other one that we're using? Bollinger band, Donchian channels. Oh yeah, that's cool. That's them explained then, right? So that's that. Now, so it comes down to then as well, what's the last sort of component, I suppose, to kind of go through again is to express about how there's obviously a different dynamic when it comes to moving past 50% in these different setups. Because if you're moving past the 50% during a defined period of time, like on the VWAP, if you're moving past the 50% line and it's it's an expression of highs and lows in previous price action, or you're moving past the 50% and it's an expression of the average price over a duration of time, etc., 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 then you're looking for different information. So you would need to choose what it is, despite the fact that when you kind of slap them all on at once, it kind of looks like they're more or less the same in that sense. And then there's other things that we could talk about too, such as the I suppose the last big chunk of this will be coming down to this the point C there or whatever, in terms of like breaking past previous highs. Okay, so when you're looking at prices and asking how are they trending, for instance, then you can look at like things like the Donchian channels and talk about how we've taken out previous highs along the way. And of course, in this region, for example, here we didn't take out those previous highs, and that might be something that you would say. Whereas you'd be less likely to say that about the Bollinger band, you know, than the Donchian channels, because with the Bollinger band, there's you're talking about the price and its relationship to the moving average. So if the prices is moving away from the moving average, the prices will often do something like that with a moving average, therefore then in between, as you can see. So when you talk about prices then moving past a certain point and then past a high on one of them, it means something different to when you're talking past the high. And then of course then that affects like your use case, you know, because while it's A, B, and C like we discussed before, it's really about understanding the implications of A or B or C with regards to what you're actually looking at. So if you were looking at a movement outside of the Bollinger Bands, for instance, so you had price action like this and the Bollinger Bands look like this, you know, quite often you see the prices when they go outside the Bollinger Bands pull back down towards them. And then it becomes a question of, well, how are we responding with regards to our moving average and what, and et cetera, et cetera. That's a typical statement. But then that comes into point D, right, which is the kind of the unspoken aspect to these things, and it's to do with how the prices are acting with regards to the combination of A, B, and C in together with the understanding of what a trend is and the significance of moving along past these things. So with regards to Bollinger Bands, for instance, you want to see the prices moving towards the top side and tracing along past them, okay? Tracing along with them. So you want to see, you're looking for them to kind of trace up the way. And that's also similar to how these other ones work as well. It's just very particularly obvious with regards to the Bollinger Band when you think about the sort of the likelihood of actually getting continuation outside of two standard deviations away from the 20 period moving average comes down at around about 5%, and there's a 95% chance that you'd actually see the prices then come back in below the Bollinger Band again, at least to test it. So if you're understanding that you're looking for trend and you want really strong trend, then if the prices move outside of it, you're hoping to come back in and kind of then continue to trace up the way, and that's what we're looking for as well. And that's is going to change the shape of the Bollinger Band, and this is the part that most people start with, and therefore why I left to the end on all of these things, because there's indicators out there which have there's Bollinger Band out there, and maybe you'll see something like this happen at some point with the Bollinger Bands, and people will talk about the use cases for them, and this is the first one that they tend to mention. And they talk about this period here and the duodenum, if you like. Hello, I am Bollinger's duodenum. Anyway, you talk about this price, and they say that it's getting tighter, right? So we have words like come up into conversations like tight, you know, like the tiger. And then we also have words like squeeze, okay? So this is one of these overlaps. This is one of these overlaps with taxonomy, and I talk about this all the time. For instance, so somebody asked me recently, is this going to be is this indicator going to be good for me to use to understand if during the squeeze they asked about, and it's like, no, because this indicator is talking about squeeze with reference to tight price action, and tight price action is when your candles are operating in a tight enough pattern whereby the moving average that you're looking at the time, or whatever expresses the median of your baseline, has gone flat enough to allow the standard deviation, or whatever it is, a multiplier like in Keltner channels, or previous highs and lows like in Donchian channels, or the Bollinger Band standard deviation, whatever happens to be, you know, or etc., continue on the way. And this again is then why it's important to understand the distinction between the VWAP and how it resets, etc., and its use cases as well, because the VWAP specifically is going to be a sub 24-hour less than 24-hour indicator, specifically because of functions like this. If you want to achieve a result like what we're talking about here, it would be a false signal in a sense, and let me know, even though of course they all line up together and yada yada yada. If you're talking about however, anyway, I digress. This is when the prices obviously then get tighter and the squeeze happens, and what they're talking about is they're in reference to the 2 points up above getting closer to the price action itself, the standard deviation or whatever expression of that moving tighter together, and that's a squeeze. And when people talk about that, what they're saying is that this is your price action in here, and previously it was like, yo dude, I'm going down here, I'm up here, and then what, it's like, oh, here this happens, this maybe lasts for a certain period period of time, and then everyone's like, seeing oases in the desert, like, squeezing out any drip of water they can get just to survive, and then hope that then, of course, we then bust out the way. And it's a question of saying, what's your volatility like at certain points? This is why one of the things that I like to use, of course, is the DMI, and we can see that when we've got areas where there's low volatility over here, you're more liable to see a squeeze having happened here, or in price relationship to this price, at least in terms of its deviation away from the true range, as expressed down below. You'll see this ADX element get very, very low in there, and that also will show you about sort of squeezes in that side of things. Okay, so that's what people talk about with them, and that's what people use them for, kind of, and the thing about it is that if a lot of people use them and they don't appreciate that there's that just because their mood is, just because they're feeling squeezed, like they're getting their head jammed between too big a vice, right? Just because they feel like that doesn't mean that, of course, the things can't actually come a bit closer. It doesn't mean that they can't. So we have to look out for that, of course, when we are trading, or else, of course, we'll be sad, right? Okay, so that's so just look out for that and understand as well what it is that you're using them for, and what then, if you are looking at it from this point of view, then of course you're going to have to examine and understand why and what you're doing at that point. To put it into a greater context, because of course use case A, B and C, and as well D, go out the window in terms of talking about the squeeze, because then you're under different market conditions, and that is a good way of quickly identifying what conditions you're operating under. Nice one, excellent, sweet. So just in summary, I suppose, as well, you've got various different ones. You may find if you do use them in combination that some operate in the lower side and then flick up towards the top side, etc., along the way down the way. Key notes about the Keltner channel is that it has the sort of the creator of it does talk about things like breaking the Keltner channel on a time frame. We can see here this is downward price action, so we'll just look and see when the price is broke above the we have to change it back down to 10, the length 10. So this is what the guy himself came up with. So you can see then is in it, I'm saying this in anticipation, and I hope that price action proves me correct here, that we're operating in the lower half of the Bollinger Band and the Donchian channel, etc., whatever here, and then we push past and we do get closes up above the multiplier here, and it does, the prices are starting to trend towards the top side, and then we come into towards the top half, and you could use them in that sort of combination to see like, oh well, have we moved towards the lower half of the Bollinger Band? Are we taking that out? Now I don't really like that overlapping so many sort of channels on top of channels, but you can see the dynamic between them, right? Okay, enough. I think we've gone into extreme ultra detail about that. So in that case, how goes it, chatteroonies? How are you doing, my favoriteest chatterist in the world? I never listen to streams, but the last couple of weeks I've caught at least some of both TradeSpot and Outcrop streams, says Arnie. That's excellent. Thanks so much, Arnie. It's good to know that you're tuning in for this sort of stuff. Really appreciate you dropping by here every time. So Graham, Dr. Rocky, I presume. David P, I'm taking you all to the gym with me. Thanks, David. That's sounds like an awesome date. Yeah, cool. Native Flight Gold Standard of T8. Wow, thanks so much. That's nothing better. Oh, actually, tell you what as well. Thank you to the guys and girls that donated to the channel in the, before our technical issues, etc., kicked in. So I'll just would say as well, just make sure I didn't miss any of them as well. Yes, Daniel Lesage and Apple Blossom, thank you so much for that, and Hank Scorpio as well. That's all part of the same thing. And thanks to everybody who subscribed, tuning in here and seeing some information and hitting that subscribe button, hitting that like button. I really appreciate it. What have we got here? We've got half the number of likes to viewers, maybe, or 100 less anyway, 110 less. Can we put it up a wee bit? I don't know. What was it that made it that I didn't get the likes? Was it because your man's face? Was it because I did this is it this gratuitous is it this sad face that made it so I didn't get the likes? Is that what it was? Maybe I should have made him happy to be getting squeezed there in that picture. Yeah, drop a like. Right, cheers, appreciated. Dan Dawson, was there a drinking stream scheduled for tonight? There was, there is, there might be. The 3 female housemates have built a pillow fort, and I need Friday night entertainment. Oh, right, okay, well, we're going to try it, right? I need to eat some food and all that jazz, not get too drowned in the old alcohols tonight. So yeah, right, okay. Goblin Attorney says, you went into some deep detail, maybe you give some clues as to when you'd choose one over the other. Okay, cool, right, cool, good idea, right, thanks, right, cool, okay. So typically I would probably I've already kind of hinted on that with regards to the VWAP, for instance. So I would be looking at the VWAP, and more likely to be looking personally myself at the Keltner channels in terms of intraday trading, and asking questions about how we're performing vis-a-vis likelihood of breaking up above any sort of resistance that we're seeing up above us. And I can kind of show this with regards to this downward trend here. This is a 1 hour time frame, so there's plenty of 1 hours here, 24 of them a day. Gosh, I've got wind. I guess I need to eat. I'm gonna end up getting mighty drunk later on. So on a lower time frame, what have I still got on here? Keltner and VWAP. So we'll just hide these. Keltner channels, kind of like thinking, well, we'll start seeing pushing up above these areas. We were below, now we're up above, because it's like on a shorter term time frame. Now that's the thing, is that of course out the box they're giving you 20 on this one these days, but they're still using a low multiplier. So this is kind of the idea here, is you're still looking for breakouts above. In fact, maybe that's even better. Really, I don't use it a massive amount, but just looking at this right now in terms of how that worked overall, maybe that works out as being better. Yeah, I don't know. Yeah, kind of like, so that would be intraday on that sense. And likewise as well, I look at VWAP intraday too, looking for coming up, retesting, are we breaking up above the VWAP, and etc. And the channels on this one are a lot more dramatic, so I'm not like using them to aim to it. And as well, as you can see, the price action can and often does come down below them, etc. So we're not looking necessarily at this one at extremes necessarily. We're going to have to, while the channel exists up here, for instance, we're going to have to examine this as to what this like upside down Empire State Building actually is, during this time period, while what we're seeing is that we're quite far outside it. Now, of course you are hoping to see resurgence of price action back into these things, but excuse me about that, but as you can see, it's so erratic that at periods, in terms of, this is the crypto chart, so here you have us like after 12 until 12:30, it's going to be tight every day. Now that doesn't necessarily mean that at 12:30 every day in this chart there's a massive break on the chart or whatever. It's just talking about how this is going to be showing up, so it's like, it depends. Like, this is really good, throughout the day it's really, really good, but I'm hoping to have some ideas about how things could take off and get going in the start of the day. But I'll be looking as well and saying, in terms of trading stocks, if this had a move up like this, it's going to have the potential for a gap, maybe not like that in terms of that specific example or whatever. If we're looking at movements like this, and we see that we've of course had the price action here, operating right outside of them, dropping right down the way, and the VWAP themselves from that day coming down here and completely starting off, it's like, this here is distinct. It's a different changing conditions. And I'd be looking at this as well and kind of wondering, would we come back up and fill in the gap, etc., and talking about that from all those points of view. So it depends. It's just, as you can see, it's got its absolute definite use cases there for that one. And then you could conclude the Keltner channels again and kind of see that this, of course, is smoothed out over a longer period, so it'll take you from one day to the next without those collapses. Moving outside of it is okay. It's kind of like, we can, like, when we move outside, it's more like looking at the swings around about the place and not being so ultra focused on what's going to happen in the next candle, etc. Then in terms of like bigger movements in price, you could look at the Bollinger Bands and say, well, while we were pushing down here, and you can see the prices coming down the way, that it was like going to trace the Bollinger Bands, what we were hoping for, and then when it actually pushed right outside, it came back up the way, and we were looking to see, well, how do we perform at the Bollinger Band, having moved outside of it, with a 95 or at least 85% plus chance that we'll come back in here and at least test off the Bollinger Band itself. And when the prices then continued up the way, you're kind of talking about, well, okay, so now we've got a better idea. It depends on what you're looking for. I mean, they're not a billion miles away from each other. So it's the kind of the point that I'm talking about here, but there's subtle implications of what each of them mean and how they operate is how you use them. In terms of like Donchian channels, it's far more to do with, like, it's less to do with these oscillations necessarily as it is to do so often with the significance of understanding when you've had body closures above previous areas. So if you're to scale it out the way, you've got like BB here, and then like in terms of like you've got Keltner channels, and then you've got like Donchian channels, and then you've got like VWAP in terms of did I miss one? And what I was looking at there, no, I was looking at 4, right? 1, 2, 3, 4. Yeah, so like that would be like your kind of, if you were to kind of lay them out there, and you've got the similarities between them in terms of like the significance of pushing past certain zones and how they're constructed and the overlap. You'd be like, this one's more similar to this one in terms of its construction. This one sits midpoint between this one and this one, and its use case is kind of like is more distinct on this one. Although how you think about the sort of the psychology of this one and this one is like, you know, expressed more neatly in the middle here than to look at the Bollinger Band one, despite the sort of the mathematics behind it looking like that. And that would be kind of how I think about it. And I suppose as well, if there was like a brother or whatever of it, you could say like, you know, while they're similar, but I've got like distinct, like they're calculated very differently, really, and they got different overlaps and whatever. But you can see that they're family. Then you talk about it like that way, I suppose, really, given the sort of way. But there's another thing. One final note as well, just to be clear. The guy that did the Keltner channels it was a good guy and didn't want to take credit for it. Because he said that it was just something that he had like known from all the traders out there in the office, and it was like him that put it in a book, sure, and whatever else. The Bollinger Band or whatever, it's standing on the shoulders of giants over here. You know, like this is a giant. Oh, look at that! Kind of holds this up a wee bit as well. That drawing, nice one, excellent, sweet. That's it. That's we touch a sort of anthropological end to it, right? So there we go. Nice one. Sweet. The man holding up the different indicators and all that earned an extra 30 likes. Excellent. Fantastic. Thanks so much. AV80, thanks so much. Timestamp, please. Oh, I don't know. Oh, I should have been doing that. I forgot to do that during my jazz here. I should have been writing in the editing in stuff, but darn. Right. Somebody's saying have a good weekend to somebody else. That's cool that you're just saying that. Chris, nice to see you here, by the way. Laughing at the peelers outside. Aye. Native Flight, good to have you all here. Right, so let me know. Talk to me in the chat here and let me know what it is that you'd like, because I think we're at 1 hour and 1 minute into the stream, so I'd like to be able to kind of, you know, end up the stream fairly nice. It's a nice package here in terms of what we've got. We talked about the GME price action, the AMC price action, kind of explained the last couple of minutes before close, talked about what we're looking for today and tomorrow, etc. Then we went on to have a sort of a little bit of an idea of the crypto market by saying, we're looking to see how this plays out with Bitcoin, etc. over the next wee while, and could this be turning around? And then we went on to take a look at the all the different channels, and that's a pretty neat episode overall. So I could kind of wrap it up there and be like happy to have that. So that means you need to get your wee sort of requests or whatever, if there is any in here. Keltner channels is the giant. That's right, I think so. In that one, that might not be Right, I don't want to get my anthropology wrong here. I don't think anybody's going to I don't think the anthropology police are going to come and arrest me, though. So I'm happy to have instruction on that one. I'm not 100% sure I got that one. I am with regards to Keltner and Bollinger. Whatever. Moving on. I'd love to hear your thoughts on the TTM squeeze as it incorporates Keltner and Bollinger. I use it quite a bit. If you want. Cool. Okay. Right. I don't actually use it all that much, right? But you're right. It does. Let's stick on the TTM here as well. This is specifically with regards to that squeeze. So you got TTM squeeze you have here, right? Were you using the one up on the? There's also, I think there's a TTM. There's a squeeze thing that shows up, but it doesn't really matter. It doesn't matter anyway. Let's first off look at it and say, what is this showing us? Well, it's showing us areas where the prices are moving without having deviated much away from each other. What are the settings on this out of the box? 20, looking back 20. So we want to be hiding that one and bringing up the Bollinger Bands, because of course that's 20 in the middle of that one as well. So how good and useful has this been for us? Let's just recently. I mean, right. We'll make it thick and white so we can see where the 20 line is here for us. Came down, went sideways and up a wee bit, but didn't take out our previous, sort of the movement up the way, then created this flatness here. Let's see in terms of this, it actually started to go up. Yeah, we got this movement up, but and that's great, but we didn't get to get follow through because the prices themselves didn't follow through, obviously. And here the price is moving up the way with that increase, of course, cashing down the way. And then when we push past there, that's when we went past the median line of the Bollinger Band. This is like the MACD histogram in a way, right? So if we get the MACD histogram up here, then we can have a wee quick kind of look at how our two histograms compare to each other, right? Because what we've got here is an expression of movement within a channel as defined by a baseline, which it actually is another longer way of saying, deviation away from the standard, from the moving average, which is of course expressed here with the histogram of the moving average convergence divergence. So my thoughts on this, just straight out the box, are it's a bit of a smoother MACD histogram. So would I use it for divergence, etc.? I absolutely would. It's of course interesting to understand how this is operating with regard. You can see my thoughts on it are great, crack on, mate. You're probably doing almost the same thing that I'm kind of doing whenever I'm using the histogram at certain times when you're looking at it, because as you can see here, they're not a million miles away from each other. Am I right? I'm right. That's cool. That's great. That's a nice one. So thanks very much. Interesting little things about this, though, incidentally, just the fact that the prices here with regards to their interaction with this high is shown us by how we came up here above the median line of the Bollinger Band, but we didn't actually close above the price action here above the Bollinger Band, and it remained negative down below. So that's quite an interesting little aspect to it there, and we can see this feature of this thing repeated here. Thanks so much, Andrew Parker. You rock, Rocky. You're Rocky. Yo, Rocky. Cheers. Give me a few times and I'll read any sentence. There, write it in English. Give me 4 or 5 shots at it and I'll get through any sentence. That's how good I am. Thanks so much, Andrew.
Yo, Rocky. Cheers. Clinking beer mugs.
Clinking beer mugs, buddy. And again, here you can see the in that period of time. So how did we actually operate at that point? We did get closures above the 20. How exactly is the TTM squeeze calculated? Like, final thing, just because I'm interested in, of course, the holistic aspect of all these things, let's just investigate real quick. I don't claim to be an expert on the TTM, so I'm not going to just start diagnosing this distinction that we're seeing right here, so let me just get up what the TTM is so that we can see. Oh, look, there's my speed test happening. TTM squeeze calculations. All roads lead to Rome, you know, when it comes to technical analysis, and it's always kind of, after a certain point, it's like learning a language. You're looking for like the differences in the things that you don't know from what you do know, and that's one of the kind of the basis of how I try to put out transformative knowledge. I want to see the calculation though. The components squeeze squeeze on-off dots and momentum histogram, whatever about the on-off dots. The calculated Bollinger Bands for security. Carter uses standard Bollinger Band settings of 20 periods, 2 deviations. These parameters can be adjusted. Yes. Second, calculate the Keltner channels for security. Carter uses 20 for the moving average, fine, and ATR of 1.5 for the ATR multiplier. But these parameters can be adjusted as well. Oh, that's part of the Keltner thing that I didn't talk about, is that its multiplier is based on the average true range. This is something that I should have actually said when I was talking about the configuration of the Keltner channels, I suppose, actually, is that you have the channel aspect of this one is, of course, you've got a 20 period moving average, and then you've got these channels going around it, and the channels are a multiplier of the true range. Okay, so the candles are operating like this or whatever, and at this point here there's smaller range, so we're going to see a squeezing of the band, you know, so it gives you that extra dynamic, which is important to have mentioned, which I didn't mention, which is why it's about looking at it's about when it pushes up past that, you know, it might not last forever, but at least you've got a slight change in conditions, whereas when you're looking at some of the other ones, you're looking to try and identify what the conditions are and hope for continuation. It all works the same. It really depends on what way you want to kind of split the sentences up. So upper lower Bollinger Band greater than upper Keltner channel, lower Bollinger Band lower than the lower Keltner channel. Wow, this really truly is an all roads lead to Rome thing. It truly is. So at these points here, we can see that because of the calculation of it, that the upper Bollinger Band wait a minute. Yeah, that's when the squeeze is on. Wait, the momentum histogram. Sorry, the highest high in 20 periods. This is what I actually wanted to see. Highest high in 20 periods plus the lowest low in 20 periods divided by 2. Oh, it's using Donchian for the momentum part. Oh, I like this thing a lot more than I realized. Uses the Donchian midline for this part, using 20 period Donchian midline. And calculate the SMA for the close, a specific number of periods. So by default, 20 period SMA of price. Calculate the thingy. So Donchian channel midline plus the simple moving average divided by 2. Okay. So you're making a moving average. That's funny, isn't it? So you've got a moving average of the this is a moving average of an average, right? You know, or whatever, right? You've got the SMA added onto the Donchian midline and divided by 2. It's a moving average of an average. And the MACD is constructed in the same sort of essential building block way. But what we're looking at here is got a key intrinsic part of it, which is to do with this sort of so-called Donchian midline. You know, that's what they want to call it, Donchian midline. I'm cool, I'll roll with it. And it's the 50%, obviously, period mark between the highs and lows over the last 20 in this case, plus the moving average. So we can see that the trend hasn't really turned around during those phases of time. So isn't as good for, where's my chart? Isn't as sort of necessarily as good for the divergence then. And as we can see here between these highs here and there's divergence there essentially, but I mean it's not necessarily divergence. There's a divergence between the histograms here that we're looking at, the two of these. That's super interesting. And so we know that the reason why this going up the way is because of the moving average convergence divergence, and it came up with a little peak. But we know the reason why this didn't was because that despite the fact that the prices did go up the way, that they weren't able to take out the moving the high, the midpoint between the last 20 periods high and low plus the moving average, which may push or which may increase or decrease that number, obviously if it's moving down the way, etc. Which means, so obviously at times when the moving average is adding on to that line, it means that the prices have moved down and moved back up again in such a way that over an average period, that gets smoothed out enough. Whereas from a sort of Donchian's perspective, you've come back up towards the midpoint, pushing the Donchian channel lower as compared to the moving average, which pushes it higher during a downward trend. So there could have been a recovery, but you've not, which would be represented like there in the MACD, etc. But you wouldn't have pushed past that overall momentum into the charts on the way down the way. So that's the interesting part there. Super interesting. That's great. Nice.
I buy and sell crypto based on CoinDesk and Cointelegraphy media reports. For example, when the report is positive, I sell, and vice versa. Smiley face, smiley face, smiley face, smiley face, smiley face.
Counter trading those guys, good idea. Yeah, that's probably going to be a fairly successful strategy to you. It'd be good if you could have a sort of the Coinbase or the CoinDesk and all that sort of indicator down below, and you could be like, oh my goodness, it's so green over there at CoinDesk. Let's just sell a little bit just now, shall we? Or whatever. TradeSpot, so the Zig's talking to TradeSpot in there as well. That's quality. Vic, I don't know if I did it justice there. You asked me to take a look at something that frankly I didn't know enough about to talk about without looking up the details on it. I just had a kind of brief memory from having looked at it in the past. So I thought, hey, how about we take a look at this together and see if we can learn anything. And I liked the way that this led down, that we were able to see this kind of rabbit hole, if you like. So just here at this point in the MACD, to kind of finish that off, you can see that we had a high recently that didn't take out our previous high, and therefore when we had a higher high here in the MACD compared to over here, that was of course hidden bearish divergence. Hidden bear writing it on is a waste of time, but anyway, that hidden bear divergence, right, is here between these two highs on the way down the way, giving you that sort of at least the expectation when we had this low coming in here, that even though these lows in and of themselves were bullishly divergent at that point, that if we were to of course fail to take out that high and therefore then include this in our calculations being bearish divergence and then come back down the way, that we could be looking for a very deep retrace, like aiming at least for that 618 and perhaps even beyond, and then of course down towards the lower end of the Bollinger Band, asking questions again at this point about whether or not we're going to take it out lower. And just looking down below, it looks like, we've got enough bullish divergence just here on this low, thankfully, which has come in to kind of make it worthwhile having put it in, because, oh geez, calm down. So we can see all that kind of happening at once for us. This showing you that in terms of have we taken out that high? No, we haven't. So then if it looks like this on this one, then that divergence, obviously this and this at the same time adds up to being a bearish thing, right? For instance, as a sort of examining what the relationship is behind those calculations, right? And coming up with it. Like I always say as well, there's all of these things are just different ways of representing the price action from the charts up above, down below, so that we get a better insight into what's going on. Understanding them is obviously important, but you can leave that sort of type of homework for me to do, and if you want to understand it together, then just have to ask. We'll do it.
Hey Rocky, why do you think AMC will moon as much as GME? Happy Friday drinks, mate.
Thanks so much. Really good. Right, that's not that's a leading question. It's a leading question there, and I appreciate it. It's good leading question. This is the AMC chart over here, and we're seeing it's gone up a veritable fuck ton overall since its lows up to these highs where it recently came in. It had 300% up, and this is the 1 hour time frame, and those lows were just down there on the this sort of early May up to the 10th of May, etc. And we've gone up 300%, and that was a decent enough trade that had a value play off the back of it. Wait, is this AMC, right? That's AMC. Just had a value play aspect off the back of it, with saying, hey, you know, it's a worthwhile play to be in this thing just to come up towards this, which is what I always kind of thought would maybe happen. Now, right, it's a question of whether or not we get squeezes. So when you see people out there in the world that are going to be selling at the minute and saying the squeeze happened because of these sorts of things, then it's not great. I want to see the squeeze kind of, you know, being in this territory, right? And then it becomes a question of it's a fool who tries to say, you know, with any real sense of determined certainty, what will ultimately end up being the outcome in all-time high territories, especially following on from, you know, this extremely bullish action on the way up towards the top side. So it's extremely bullish. So I just you know, just to have that in our back pocket. Now the numbers are a lot lower here that we're messing around with, but if we just bring on a fib retracement just initially, and I'll not even do it, you know, really precisely or anything here, and we look up towards the 1618, actually it should be, I think it should be a bit we tad higher is where that calculation should come in at, but who gives a whatever. Then you're looking at a movement up towards that price, you know, and from where we are to there at the minute, it's 557%. So I'm not like super like, you know, and even at that, I think this is like where they would like to short it down from. And I think every time, thanks so much by the way for that donation. Thanks so much for that donation, Stephen. I really appreciate it. So every time that we see that we've gone up to somewhere, we want to have our dude, you know, like we want to have our dude and saying this is great. We've got another fishing rod here, like getting lots of more fishies, right? I mean, like this is kind of what we want to have in this area always. And yes, there will be pullbacks, etc. But you want to kind of keep building up the bags, you know, along the way, so that in this period just over here, a lot of people made the wrong decision and it went up. Then those people actually continued to make that wrong decision in here. Then it went up towards here, and those people continued to make that decision. And what gives them the confidence to keep doing it is when you get these pullbacks along the way, and they're like, "Oh, great! You know, if we just keep doing this because we've got unlimited money and we've got that we can just make as many unlimited synthetic shares and everything else as we want to do, and just keep on breaking all the rules and everything else. And at the end of the day, we're pretty sure that if we get it to be racked up high enough and high enough and high enough, the government will just bail us out anyway, etc. So it's like, you know, they've got a pretty safe position overall, quite a lot of these guys, you know. So we want them to keep being in there and that, and I want another period of that to happen up towards that side, etc. And to be, you know, to see it. But now to say that I think that it'll squeeze as much, that one will squeeze as much as the other, isn't strictly speaking true. And I'm not 100% sure which one I decided overall would squeeze the most if they did kick off in a squeeze. But in terms of the GME type of chat anyway, I'm looking for this thing to go up to like stupid high numbers, and I'm not selling mine until it does, you know. And if it doesn't, then I'm turning around and blaming all of you. I'm just kidding. But if it doesn't, you know, then it's also a really extremely good opportunity, I think, overall, because this is a fantastic, relatively new company, where it's had a history of had, you know, the world working against it. Now it's got a fresh new board, new ideas, new vision, and it's really going places, and it's worthwhile paying attention to stuff that's got velocity and it's moving. So this is happening, and it's in all-time high regions. Of course, we've not taken out those areas, blah blah blah. It could go on up the way. Remember then that movements from here up towards the top side, like, you know, come in at really big percentage moves, of course. But if we see the prices going up towards $1,000, for instance, that's 146, 100 and yeah, 140, 100. So we see the prices going up towards $1,000 here. It's like 300%, right? To get up towards that 330 roughly, you know, from there. I could have said that without actually bringing up, you know, making the maths point, whatever. If we see this thing going up the way towards $100, then it's like, or 100 and 150, 140, etc. Then it's 300 odd percent, and those are just like kind of arbitrarily targets that I just kind of plucked out of my ass just there now. So we're talking about big things moving big amounts. Along the way, I want to see the fishes being fished, and along the way, I don't see there being a massive distinction far be it from me to be the one that says, well, the next sort of fish feeding frenzy will happen at that level or that level or that level necessarily, right? So I don't think that necessarily, but I did want to make the distinction that this was up until this point, in my view, like this value to be extracted from the market. Now I want to see things like, can we have the follow through? Can we have Adam Aaron, for instance, leading the charge? Is he going to? I made that song, I like Adam Aaron, I'd even let him take me to the movies. In fact, I said we, actually, right? We like Adam Aaron, we'd even let him take us to movies. We also really like Ryan Cohen, and we have actually taken up Eating Chewies. But the thing about it is that Ryan Cohen's with his dynamism, and he's new, and he wants to make things build and change the world and that. And Adam Aaron has been at the helm, bringing us forwards, etc. I want to see if that can then continue into the all-time highs, and that there isn't any sort of like extraction to like or egregious extraction of value from the world. I mean, for instance, I'm happy that the 36 million odd shares or whatever it is that or 32 million odd shares, whatever it is that they have, already authorized but not issued, that they haven't just dumped them onto the markets here necessarily at the top. Now, we might go out and find that AMC were the ones that sold shares themselves, or like, I come out the woodwork, etc. Who knows how things are going to go. I want to see them holding back on that one and adding value to it, or else indeed, if they do sell them, to be selling them in ways that, is low volume amounts of sales, just to kind of like, take a skim off the market as opposed to control the markets. They have to be careful when they've got that amount of shares in reserve ready to go to do that without authority from shareholders and votes, etc. So I want to see that, and I'm liking things like I see like Adam Aaron following Trace Trades, Matt Kors, the Masked Investor, etc. He's following these guys on Twitter. Doesn't follow me, but whatevs. He's following these guys on Twitter, and I think that's cool. He's engaged, he's involved, he's seeing the community, he supports that, and he's liking it. I don't like things that which at the minute, great because the prices came up so high, constituted FUD overall, to be like, look out for Adam Aaron because he's also setting up a SPAC with Ken Griffin to buy Lamborghini. Now, I didn't do my own due diligence on that. I read it and I thought that's really interesting for like loads of reasons. But I'd be interested to find out what the follow-ups are from that and everything else. I mean, hopefully, it's all just good stuff, and that, and I'm not going to buy into any FUD. But it's just like, that's what the article was talking about. It's just kind of funny. So yeah, that's my thoughts on that. Sorry, I kind of went in a few digressions there. You asked me a question. It wasn't the answer that, perhaps the question you asked, because the answer that you said is, why do you think thingy? And I'd have to say, too long didn't read. I don't think that. And then, why do you think GME is going to go up more than AMC? Well, I don't think that. I'm not in the business of making predictions about stuff, and somebody else can do the maths to tell me what the percentage difference is. If I said that AMC could go up to $1 million, and that GME could go up to 19 million, I mean, what was the price at the time of AMC when I said it, and the price of GME when I said it? And you can tell me what the differential is there. And I'm not going to split hairs over it. If you say that I think that AMC can go higher, then all right, man, that's cool. You say, work out the maths. We're talking big numbers, right? And I'm going to be the last guy off the ship anyway, so that's basically, it's all good. For me, AMC is purely market dynamics, and GME is market dynamics that can fuel company dynamics, which in turn fuels market dynamics, all with boomers betting against you to add more fuel. Lovely, well put, Dan Dawson. Absolutely fantastic. And that's a big function of what I was getting at in terms of, coming at it from another sort of way of expressing the same thing when I was saying we're looking at a value play up to here with AMC, looking to see how things go versus the sort of what we're looking at with GME. I feel like we're operating on the same wavelength overall there. Mika Monte saying, by the time I visit Scotland, I will have this accent down and you'll never know I'm from NJ. Really? Nice one. We'll just bring that New Jersey attitude with you, and you'll fit in fine anyway. Right? I think so. I think so. I think we're kindred spirits there, at least in terms of reputation. Announcement: Domino's delivery, says Tony. That's cool. Sorry, not sorry. Hey, Tony, that's all good. You know what, everybody? I'm going to tune out in the next minute or two, right? It's been an absolute pleasure. I think we've covered quite a bit of ground here today, and together, we did it together, apes together, right? We do things together. You guys, all of you out there, you guys and girls, I don't make any distinction on gender. I just say that to be for brevity's sake. Well, there you go. And then I pan my own head in with stuff like that after. But then, so all of you genderless species out there, really massively appreciate every single last one of you for tuning in. I'm going to do a reverse roll call just now. I think we got a good opportunity for people to ask questions. If there is something which really is missed, then get it in there, because I've interrupted and reverse roll calls in the past, so I'll do it again if need be. My hands are diamonds. But I'm going to, just for now, pop up the credits as I do my reverse roll call, because the credit has to go to all of you yet again. This stream would be nothing without you. Funnily enough, it was nothing for a long time, and it wasn't nothing because there was a few people tuning in. It was amazing, and I loved it, and I love every memory I have from starting the channel. But you bring so much to this, Oh, look, thank you so much, man. That's super appreciated.
Rocket.
Yeah, he's bring so much to it. I love this. I love it. I love the community. I love the feelings that everybody has. Speaking to Tony earlier on today, Tony, who was in the chat there, I'm really excited. He's a guy who if you like, actually, Tony himself described himself as being one of my students who I tutored, and now he is going to actually start his own. Don't want to spoil it. I'm going to do it, Tony. He's going to start his own YouTube channel, right? Talking about technical analysis. This is the guy who, after I started my YouTube channel, has learned that much. He's got to that point, and wow, I'm just so blown away proud. If any of you out there yourselves want to set up a YouTube channel about doing this sort of thing, let me know, because I'll totally support I'm so fantastic. Okay, what's that guy doing there? Nightbot's clearly on a rampage. That's all good. So Tony, fantastic. It's so good, and it's not just Tony. Other people have done amazing things recently, in the past. Like, so shout out to Sean Thomas, for example, just as an example of another person who's taken wing himself. So amazing. What are all these spammers all about? They're really distracting. Thank you to the spammers, so to speak. Right, so good one, Tony, and good one, Sean, good one, everybody else, and good one, Tony. I'm really looking forward to it. One of the things that Tony achieved recently is that he made $500,000, and as a result of that, he got a new BMW, and he didn't do it in 2 seconds. He didn't do it by just having one lucky break. He did it because he's got skills and knowledge, and he used them with his skills and knowledge for life, by the way, to succeed. And I'm blown away by that success, and I'm so super happy for him. Great. Right. Cool. So thank you then to everybody for tuning in. These guys, man, honestly, they why are they spamming me so much like that? Is that what it is? Just jealousy from other people's streams? That's cool. Well, I suppose that's flattering, right? It's flattering, isn't it? It's flattering. They're tuning in here, seeing the credits are up, and that there's still 259 people. That almost everybody that was watching the entire stream is still here right now. That's how good this community is. That's why they want you guys. It's why you're in demand, right? Ah, my arm. Fuck. God, what a load of hassle. Right. I'm going to do the reverse roll call here. I was seeing people like Fed. We've got Tony, for instance, Rex Racer, absolute legend, the man himself. Native Flight, thank you so much for tuning in. We've got DMC17, Kim Robbins, Worthy's Life. We've got TS, right? And then, of course, there's all these people that need the extra shout-outs, not least of which as well, Purple Haze and the Dead Money All-Stars, who both became members today. Who let the bulls out? Peace, love, good to see you, my friend. Fantastic to have you here. This is one of these other guys that's been around for a very long time. Randy P, thanks so much. Arnie, thanks so much for tuning in. Purple Dino, thanks so much for tuning in. And of course, Chris Sweeney and Grace. Well, there's a challenge. Roulette. I'm going to go with that. Grace Oulette. Thanks for tuning in. Joshua Smith. Look at that. Look at how much users are in demand. Look at that. They keep on spamming. They just keep on spamming. The best crypto community out there best crypto community? Pfft, whatever. Best technical analysis community out there without a doubt, right? And I'm going to give a shout out to these ones popping up on screen right now as well. The super chats, I really appreciate it. Absolutely, always do. Daniel Lesage, Hank Scorpio, Andrew Parker, Chris Sweeney, Mining Boom, Stephen Kimbler, Luke Spears. You guys, absolutely fantastic. New members of the larger Rocky Outcrop family include Doug, Andrew, Bruno, Carlin, Deirdre, Diraj, Tushar, pinned by Adam Koo, Thomas, Big Slip, Jason, MJ, Joe, Josh, Room in Boston, Cook, B, Ksuski, Robbie, Imperial Manor, Wendy, Abyss, Josh, Becky Rosario, Manda, Boy Maker, Brothers Life, Benley, Benny, Shapenish, and everybody that's going to tune in again next time as well.